I mean, we don't know what it's going to look like, of course, because it doesn't actually have to be like that at all, does it? But would you agree that that's kind of what this chart would look like? So you also can recognize that the reality of this is that this is passive bullish. Passive bullish. Do you agree with that? So we have a narrative for this story. The narrative for this story is passive bullish. We want to try and get into that lower price. We want to try and hold that edge. Now, if I was to draw the smart money line, what direction would the smart money line be going in? The smart money line would be going up, wouldn't it? The smart money line is the tick delta volume delta difference. So if we're taking the tick delta from the volume delta, then of course the volume delta dropping a lot faster means that it's going higher, isn't it? That means that the pink line is going to go up, and this is the smart money line. This is the smart money line. Now, who are the smart money? Well, the smart money could be the market makers, but in a lot of cases, the smart money is actually the commercials, isn't it? Because the commercials are the passive, the real passive bullish traders, perhaps in the right location. And we can start tying that in with, for example, the limit order book, the commercial limit order book. And if we tie that in with the commercial limit order book, one of the things, if we're doing ask minus bid, the idea would be that that's going down like this, isn't it? Or what it maybe did was it didn't reveal that trade at first, and we got one of our classic trap type trades where it did something like that. And then we started to see that that was a real opportunity to now trade this. And that's the commercial line. It's not the same as a smart line, is it? It's got nothing to do with a smart line. So when we see that storyline of this tick getting beaten by volume deltas, and then you see the commercials coming in behind this, you've got a very, very strong setup. Well, what happened in gold? I won't bother asking you to look at the chart there because I'll just take a screenshot and we'll goosey at it in a second here. But if you're looking at that setup, and we've all agreed what that setup is, and then we look at gold during that little phase, and I ask you to verify that what we see on gold is exactly what we've just drawn here. Can everybody tell me that that is indeed the case? Can you guys look at this area here and notice that the tick delta is a lot higher than the volume delta, yes or no? In that cheeky little area there. So the tick delta is a lot higher than the volume delta, which conforms to this narrative that we were building here, doesn't it? It's an agreement with that narrative, which means that we're at least passive bullish, but the price isn't actually lower, is it? So they're a little bit more than just passive bullish. They're actually a little bit more than passive bullish. They're actually quite aggressive bullish now, aren't they? And then when we start to then recognize that this takes place here, when we start seeing this takes place here, which is this big arrival of commercial liquidity behind that more aggressive bullishness, can we all agree that that's what happens here? Right before the price ripped for $1,400 profit per contract on that trade, right before it happened. It's almost perfect, isn't it? It's almost the perfect narrative. And it's not just this narrative, is it? It's not this storyline. It's multiple other opportunities to see this storyline in many examples that we can highlight, isn't it? It's all over the chart. These stories evolve beautifully in every location that we're looking at. And it's not necessarily just about one piece, but when you start tying the order flow pieces together, you start recognizing some incredible potential to really read the tape clearly without actually looking at footprint charts. By combining these two elements, you are getting as much detail from the footprint. The only thing you're not getting, and it is the only thing you're not getting from the footprint at that stage, is those arrivals of Voltics, for example, those individual price points that are very important for example, execution to lean against. But that's okay. We can find other things that can help us with this. We can obviously have it against a footprint chart as well. But if we have it against a footprint chart, you're always going to have that idea of a lot of information all visible at the same time. But when you're ready to do the deal, that's the advantage of NinjaTrader, is that you then zoom into the footprint chart, which was invisible up to that point. You can zoom into the footprint and then look at it and say, there's where I'm leaning against under those circumstances. That is spectacular. Don't know if you agree, but that is spectacular. That trade there is like, if you find that trade once a day for $1,400, you will be a multi-millionaire trader within a few years, no trouble at all. Just finding that one trade setup a day. And this entire trade setup is all order flow, all order flow. You've got the ability to improve on that order flow because I just showed you that trade a few minutes ago, didn't we? You've got the ability to improve on that order flow because in that area, if you remember, the dollar was getting murdered, the bonds were getting ripped higher, and you had that opportunity to start working really hard on your buy-side gold, didn't you? Now, when the dollar drops out and the gold's now bid, that's a different story. We're working on the dollar at that stage, but it's still the same narrative. The dollar storyline, if I zoom out, is still bullish, even though that's got a short-term drop in it. There's still a very strong macro dollar in the background to this narrative here. Well, strong macro dollar. It's at least bullish. There's no, if I draw a line through that, if I draw a line from this point here, for example, to this point here where it started to come out, if I then take that line and I shove it into the gold price, I mean, gold should be trading up at 322s. 322s, not 310s. So you get the context of that lower price gold there, and it's just a beautiful context. So it's not just the arrival of the commercials. It's not just the arrival of smart money. It's also the story that goes along with that bloody arrival. It tells you this is a screaming benchmark buy opportunity to play this long. And it turned out to be the case. You got a very, very nice $1,400 away from that beautiful bit of buy-side value. So $1,000 on the way down, $1,400 on the way up, $2,400 a contract on two trades. $2,400. A little 5-lot in that today, guys. You've done at least that 10 grand, haven't you? Crazy money. Two trades, two massive winners. Gold. Welcome in, guys. We'll get through the news in a second.